everyone. FinanceFeeds is here on location in sunny Limassol, Cyprus, as we continue our discussion with executives from prop trading firms. I'm joined today by Petros Kalaitzis, who is Chief Strategy Officer at FunderPro. Petros, it's great to see you again, and thanks for joining me.
Thank you for having me, Nikolai. Good to see you as always. It's been some time, so I hope we have things, and I'm sure we have things to discuss, which are quite important and interesting for our audience. So I'm very happy to be here again.
So I wanted to jump right in and say, the CFTC's case against MyForex funds was recently dismissed, actually with prejudice, if I believe. But this is obviously not before MyForex funds suffered a lot of reputational damage. Yeah. And I think my first question to you is, what lessons can we all learn from this case?
First of all, it was actually, I assume, a very good outcome for the company itself. Right. It's been a while since this case was actually open and everybody was discussing this since the first day that it happened. And I remember back then it actually shaped the foundations of the prop space. People were rushing to judge the business model, etc. What can we learn? I think it's actually comes back to the things that we discussed, you and I, in the previous time that I met you. At the end of the day, it's about transparency, right? Like you can build an empire, you can have a great company, great product, and then it can take few minutes to destroy reputation, and you cannot afford having your reputation hammered, right? You can afford losing money in some cases. Usually companies who are quite strong, they can, of course, they don't want to lose money, but they sometimes can afford losing some money because they would probably create more in the future and cover it. But most of the companies, I don't think they can afford losing reputation, right? So transparency is something that it's actually a hot topic. It has to be a hot topic. You need to be transparent to the client to an extent that you can be. I'm not saying to reveal everything. At the end of the day, some things on the client side are completely irrelevant, right?
Sure.
And I'm pretty sure we will discuss this in this session. But when you're doing things far away from the gray zone, I don't think that you have something to be afraid of. I don't know the actual details. I don't think nobody does, despite what they say, apart from the people who got involved. But back then there was a ground for CFTC to do what they did. Now it turns out that the company was right, if we can call it this way. But again, if things are happening on as transparent way as possible, then usually, you don't have to deal with these kind of cases.
Yeah, absolutely agree. We'll see what MyForex fund does in the future. I mean, I would think, looking back, for many different companies, not just within our space, I mean, if you suffer this type of reputational damage, it takes time, it takes effort to build it back up, and we will see what happens with them in the future. I want to discuss another legal case that's come up recently. A U.S. court ordered judicial default against a funded engineer after revelations of wash trading and fraud involving nearly $1 million. Again, something that I would say negative news, right, for the specific industry segment of prop trading or funded trader firms. But because you have so much expertise in the field, how common do you think this kind of malpractice is in the prop space, if we can call it that? And what should traders look for when trying to identify a legitimate firm? I think that's a never-ending question, really.
Yeah, it is. Look, what I will say, and I always say that, like, if somebody wants to cheat, he will find a million ways to cheat. If somebody doesn't want to cheat, he will find another million ways not to cheat, right? In the beginning, people were thinking that when you're not regulated as such, because prop trading is not regulated, at least yet, there is some additional space for things like that, which might be true up to a level. However, there are legitimate companies. I think we are one of them. So obviously, but there are proven cases that people are here to stay. The companies are here to stay, and there are cautions that can be taken internally from each firm to prevent people like this gentleman, which obviously we don't know, to be in their ecosystem, right? So I believe that if you're a legitimate firm, you don't want this kind of people in your ecosystem. And to the best of your knowledge, you should be trying to have the mechanisms of identifying him, kicking him out of your space. What can we learn? We learn that, again, risk management. I know you agree with me. It's a never-ending question. / it's a hot topic for every single podcast panel or discussion that we have around the topic. It's becoming more and more sophisticated, especially based on the recent events with Trump's government, which I'm pretty sure we will touch base. History has shown us that it has to be there. So you need to have mechanisms for detecting fraud, being able to kick them out, and obviously as fast as you can do it, the better for you, right?
Mm-hmm.
So I'm not saying that it cannot happen. It can happen almost to anyone. I'm just saying that people should take precautions and try to minimize the possibilities of having something like that in their ecosystem.
Mm-hmm. Mm-hmm. This brings me back again to the idea that I shared with you last time when we spoke about creating an industry or an industry organization or some sort of body where, again, it's maybe not self-regulation or self-regulation, whatever you want to call it, like you said, to weed out the sort of the bad actors, if you can call it that, because there's just so many firms in the space today. I believe that numbers change month to month and things like that. There are firms that are leading the way in, like you said, transparency and risk management and many other things, and being very transparent with their customers. But it seems like there's still many, many other firms that are kind of a big question mark, and nobody really knows who they are, who's behind them, what kind of trading model or services they're actually providing in terms of a trading platform and trades to execute and all of these things. I guess very quickly, since we last spoke, which I believe was like in March, and time is flying as always.
Yeah.
Has anything changed on that front? The communication between you and other firms, or people getting together at conferences? The conference season kicked off recently, so there's so many events everywhere.
Yeah.
Maybe you guys are talking or huddling in the on the sidelines of these events and discussing things.
Officially, I don't think there is anything changed.
Yeah.
However, in the discussions through some panels that I participated in, the usual big events that we have in the industry, as I told you, people are always talking more and more for volatility and risk management.
Mm-hmm.
People are up to the level that they can share information without being on the illegal side. They mention cases where, like it was a little bit more sophisticated approach and attempt to fraud the system from risk management perspective. So it all comes back to the rules, transparency, and the mechanisms and the technology that each prop firm has to detect that somebody is trying to do something shady in their system or not.
Mm-hmm. Sure.
So officially no, but it's a never-ending discussion about risk management. How do you do this? How do you do that?
Mm-hmm.
So,
well, I think it segues well into my next question, which is really about trade execution. And last time you and I spoke, you said that execution transparency is actually a very good marketing tool, or it gives firms a marketing edge. From your experience and what you see with your clients, do they all, or how many of them you think in terms of percentages or proportions, understand really what the difference between A book, B book, risk management, and what can prop firms do to better educate their customers, whether they're existing clients already trading on your platform or those that are looking around for prop trading firms, or maybe deciding, should I work with a prop firm or should I just open a retail self-directed account somewhere and try my my trading there?
Yes. So this is one big topic that has too many legs, in my opinion.
Yeah.
At the end of the day, people are becoming more and more educated and more sophisticated when it comes to understanding the execution models, not only of the prop firms, but also of the regulated brokers, right? Specifically in the prop space, what we see, at least from our clients, is that, surprisingly for other people, not for us, the number one selling point and good thing that our traders talk about FunderPro is not that the trades are being sent to the market. Because at the end of the day, if you would be a trader with any prop firm, would you really care if they are B booking, A booking, or doing hybrid, or would you be more interested if you will be paid? I think everybody will be more interested when are they going to be paid. So we pay and we reward our traders on a daily basis, right?
Yep.
So we are one of the few, if not the one firm that is doing things on a daily basis, despite the operational challenges that this have, because it's a hustle in the operation side.
Of course.
Until now, I don't recall any case that we didn't do exactly what we said we will do, right? So back to your question, people sometimes are asking if it's actually an A book or a B book or a hybrid model, but what people actually care is that they will get paid. So our number one advantage is the daily payouts, and this is the top of the list for any client that we have. Then, yes, they can be more educated. Some of them are more educated than others. That's quite understandable. Some of them are really, really good traders, very consistent traders, and we want them in our ecosystem with our model. But all of them, at the end of the day, they care about our daily payouts. Number one reason. Yeah.
If we speak a little bit more in detail about risk management, I mean, you and I obviously come from a fintech and retail background. If we talk about A-booking can affect your standing sometimes with liquidity providers, specifically if the flow that is sent to them, if it's deemed toxic, let's say. And I was wondering, given your experience, how does FunderPro manage expectations with your liquidity provider or providers, and then also maintain sort of stable firms while sending what could be construed as unpredictable funded trader, let's say, traffic or flow?
One of the privileges for the connection and the cooperation with LPs with the prop space is that if the actual prop firm has very clear, transparent rules and it's actually working on the risk management for itself, then it really filters a lot the flow that will go to the LP. Because at the end of the day, we in our rules, we don't allow, at least for now, use trading, scalpers, arbitraging, and all these kind of techniques are actually clearly not allowed. So effectively, something that will end up with LP has already been filtered. So we have seen cases that the liquidity providers came and said, okay, this is actually a little bit more filtered than a normal brokerage, because in a normal broker, when they send it to a book, they don't really usually they filter the client by profitability and etc., or depending on the risk management decision, right? They have.
Sure.
Here, you have already a first filter, because the prop trading firm is here to protect, obviously, its money, and then, of course, provide the service. But at the end of the day, the risk management rules of the prop firms are there to make sure that there are no issues. So you end up in a situation that the flow that goes to the LP is actually already filtered by you.
Yep.
So there were cases that they said, this is actually considered a good flow for us, and they were happy. You cannot be 100% right on everything. Of course, there will be things that can be considered toxic flow for the LP. In these cases, my personal experience is that they follow the standard procedure. They talk to us and say, look, this is the case, transparently. We don't want that in our books. Please take it out. So,
I guess a follow-up question from me would be, I'm just curious, do you find that most liquidity providers in our space are willing and ready and able to work with prop firms, or are some of them maybe a bit hesitant, especially maybe for situations where a prop firm will want to establish a relationship, but will not have, let's say, sophisticated tools, like you said, at FunderPro, where you can do a lot of the filtering yourself and essentially provide, let's say, more cleaner price or execution data, if I can call it that, as a layperson.
Yeah.
And the second follow-up question is, if you're sending them data that's already filtered from a risk management standpoint to avoid toxic flow and all of these things, are your fees lower? Because you're kind of doing some of the legwork yourselves.
No, unfortunately, that negotiation doesn't work with LPs because volume fee is a volume fee for them.
Yeah.
What we have seen is like, while in the very beginning of the prop industry, they were actually not so keen on accepting it. It's a very polite way of telling it.
Sure.
Then they realized that there are companies out there where their monthly volumes are significantly higher from a mid-sized broker that they have in their books. And that's a fact. You know, at the end of the day, as I said, volume is volume. This is a book for us as an LP. That's the price. Okay, in some cases, they had to adjust because of the business model. But what we have seen is that more and more LPs are actually not just open, they are proactively approaching and say, where do you offset? Are you using hybrid models?
Sure.
We can cut you a good deal and stuff like that and lower your fees. So now we have the advantage of the negotiation. Back in the days when we started, it was a little bit more difficult because the LPs were a little bit hesitant to accept us. Now it's the other way around. So I see a huge progress on that. And again, at the end of the day, volume is volume, right?
Yeah, absolutely. And I think that's great because, again, it creates more and more cooperation within the entire, let's say, Forex CFD industry itself. You know, there's we're all used to retail or institutional. Now we're used to also prop or fund to trader programs. It's just the industry taking the next step to expand and obviously improve as well, because like you said, the trading volumes that are attributed to funded trader firms or prop trading firms, when you compare them to retail trading volumes, I mean, it's a very sizable and meaningful chunk of a flow of business transactions, etc. I wanted to actually ask another follow-up question, if you don't mind. In one of my previous interviews with a pretty big liquidity provider in our space, they mentioned that when it comes to risk management, there is this sort of phenomenon that they've been seeing where, let's say, brokers, they have risk management technologies in place, and then they have staff, obviously, to manage risk management and to manage the trade desk. But what they're finding more often is there are certain firms popping up within the industry, we can call them consulting firms, which kind of help them analyze data and take a step back and really look at the granular details and see where they might be, let's say, missing out on low-hanging fruit, or not taking advantage of some opportunities, or vice versa, maybe experiencing too high of a cost in some situations, where they can basically optimize a lot of their risk management processes and essentially expect to or hope to receive more revenue and or decrease risk. I guess my curiosity is something like this also happening on the prop trading side, whether it's let's say internal software or systems, or hiring additional personnel to kind of do risk management better, faster, quicker, or to identify kind of where are we missing out on some revenue opportunities, or where are we paying too much?
Yes, absolutely.
Yep.
I mean, it's actually started becoming kind of a must for at least the companies in the prop space that are mid-size or higher. That's a must. I mean, I know cases that the risk management department is actually bigger than the support department, because a support department at the end of the day can be automated with a bot. But in the risk side, you need tools. But at the end of the day, you need somebody to take the decision, right?
Correct.
So we are using, and we are heavily expanding in the risk management side in FunderPro. Especially this year, the budget was significantly increased on this department. We have a fully dedicated team checking every single day the payouts, trading activity, if the rules are aligned with competition, if we are better or not good enough, if we have any open space for penetration and people who can take advantage of us. And we are actually creating now a level 2 of that team, which is analyzing the data, and we'll be feeding the risk management guys with information in order to take a faster decision. So it can significantly reduce operational cost. So it can lead to companies such as ours, which are, I mean, I consider ourselves one of the top 10 at least. So we have decent volumes, quite decent and big turnovers on a monthly basis. So it can literally save hundreds of thousands of dollars by a single change without necessarily affecting the end client, right? At the end of the day, again, to the transparency thing, if your rules are clear from the very beginning and somebody will be on board it, then you can prove to him that he has done something which falls under these rules, there are not so many open space for negotiation, right?
Sure.
So, but you need to be transparent from the beginning and say, these are the rules, this is how you enter. If you do that, we reserve the right to not to accept you as a client or whatever. On the other side, I think the clients are becoming more and more sophisticated. That's good up to a level. On a certain level, it's actually creating more risk for the companies. And then we notice that some companies have done, have taken extra steps to cover themselves. It's a business decision, we respect it, but the risk management teams, for us, it's a must. We are heavily investing on that. And at the end of the day, we are trying to put people there that they are traders themselves, so they understand also the side of the client. Because the easiest thing for a risk manager is to say, cut this, don't approve that, do this, do that, and then everybody complains. But when the team that we're creating consists from people who actually understand the client, then all the rules are quite fair and nobody can complain.
Yeah, that makes sense. I think you make two very good points, and I wanted to ask, with respect to the technology side of things on the risk management side, you mentioned, we created a level 2 sort of team, right? Are you guys using AI of any sorts? AI has been a topic, obviously, all over the place, and it's become clear that anyone can really take existing AI and have it build something for you, right? Whatever your needs may be, or you can essentially hire a firm or hire someone who is proficient in machine learning and basically build you AI tools that will help to do a lot of the things that, let's say, we today rely on people to do, or let's say certain software that may be in use or available today. Are you guys using AI? Is it something that, if you're not, something that you guys are considering?
Yeah, I mean, to be honest, every company who is thinking 2 or 3 steps ahead should already be doing this. We are using it. The general answer is yes. We have some machine learning models which are mainly used for predictions in the future, right? So we analyze, we backtest some things and say, okay, if we want to do this change, what would be the impact? And then you need like a machine learning model to run the probabilities and do all the work that a human being can take ages to do it, right? We are heavily using it also and creating in-house tools for the risk management team. So obviously this is a combination of external providers and internal development.
Okay.
So as we stand, we are in a decent level of using AI, but this has to be continuously be improved.
Yes.
Yeah.
Great. If we take a step back and talk about trade execution again, like A book, B book. If we talk about A book execution, if your client's successful, you owe them money. You have to pay them out, right?
Yep.
You guys obviously do daily payouts and things like that. But and this kind of ties into my next question. Trump recently with his tariff announcements and things like that. I mean, he caused what I would call market shocks and let's say flash events. I mean, they kind of impacted everybody really in the market, at least the days following those announcements, right? How does a prop firm, on the one hand, make sure it has enough capital to pay out all of its successful traders who, let's say, were on an A-book model, right, for example, or on a hybrid model, and how does it ensure it can manage risk when you have a pool of traders that can number hundreds of thousands at any one time that maybe are trading during these, let's say, market shocks or events, right? And this really is a broad question because what happened recently with Trump announcing the tariffs and the market reactions to them, it looks like that's going to continue. This person might say something and it depends on how the market takes it, right? And so it could be a market shock where the markets are rallying, or it could be a shock where the markets are, rapidly falling. I guess it's maybe a two-sided question here.
Yeah, look, first of all, regardless if you have A book, B book, or hybrid, if somebody makes money, you still owe him.
Yes.
At least you have to do what you said you will do. How you protect from these things? The truth is that if it's an event that it's actually kind of a static, right?
Yeah.
Like most companies don't allow news trading or holding and etc. So that's easier to be prevented because you're getting ready for something that you know that is happening. The issue here was like, a tweet, a post on X, or something happens, and then Sunday night Dow crashes or Nasdaq flies. Doesn't matter. There are some standard techniques that more or less are also being used in the brokerage space, at least from my experience. Like the leverage or etc. Like in this case, you cannot really force the client to put money in his account because there is no money by default. There is no deposit from his own money. In our space, the most difficult part was like you can take some measurements, but at the end of the day, this can happen now, tomorrow, in 1 hour, or never. So it's a little bit difficult to predict when Trump or anybody else will start speaking and he will create panic to the markets. As a result, you have people who are in the good side and they are gaining money, and you have people who are on the wrong side and they are losing money.
Yeah.
So there comes the capital adequacy from the prop trading firm, even though it's not a legal requirement. Obviously, the more strong it is, someone on his balance sheet, the better for everyone, because first of all, it can afford paying the payouts.
Yeah.
And second, depending on his model, if he's actually really losing money, some of the money in the market, then he can afford losing them.
Sure.
So the general answer is like, there are some measurements you can take, but at the end of the day, if something extraordinary happens out of the blue, there are cases that you will suffer losses, and there you need to make sure you have enough capital to cover your clients.
I guess a follow-up question, and you don't have to answer this if you don't want to. I'm just thinking, when thinking about retail industry, institutional industry, especially institutional FX and LPs and their clients, I mean, there's credit facilities that they can take advantage of in times, let's say, of uncertainty or something like that. Is it the same for prop firms, or is it not, in the sense that, again, it's such a new space that, let's say, with respect to liquidity providers, like you mentioned, I mean, a lot of LPs want to work with funded trader firms or prop trading firms today. What about credit facilities that traditionally, service retail or institutional FX? Are they willing to work with companies like FunderPro? Or is that something that's not necessarily on the horizon yet and doesn't necessarily need?
To be honest, right now, in my opinion, there is no need for this. From a personal experience, we didn't see anything as a trend, at least as of yet. Like, so we don't see that. And I don't know to what extent it will be necessary, to be honest. So when we had the recent events of volatility, even the LPs were not overreacting, in my opinion, for at least for somebody who is in the market for a couple of years. I think that they did pretty much the standard things that they would have done to secure also their risk management, right? Because they also have an exposure from us.
Yes.
So I didn't see anything extraordinary, and for now at least things are not heading this way for the credit facilities.
Thanks. I wanted to wrap things up. I think every time we speak to each other, the last question is always a little bit about like predictions for the future, possibly. So my last question for today is, what external forces, let's say maybe macro or regulatory or technological, do you think will shape the next phase of growth for trading platforms such as FunderPro?
Not just FunderPro and FunderPro. Like, so regulatory, again, we discussed it also on a private level. We discussed it also in our previous conversation. We think it's a matter of time. We're getting ready anyway in FunderPro. We don't really know to what extent or to what level they will put some regulation, but I think that everybody's expecting a sort of a regulation. Now, what will be the form? Nobody knows. So regulatory will be there. I think it's a matter of time. Whether this time is now or in 1 year, who knows? Technological, as I said, clients are becoming more and more sophisticated because they are using more sophisticated software or technology. They are becoming more educated. So we have to always be 1 or 2 steps thinking, 1 or 2 steps ahead with the AI, machine learning, whatever it is, up to a level who could predict what Trump effect will be. You know, like you can have an idea, you know, like if you're following also political updates around the globe and etc. There are analysts that are also not becoming a trend, but you know, like the standard analysis of the markets has an effect also in the prop space, right? Because if but all these are up to a level. There is always the unexpected element, which the stronger the foundation, the bigger the balance, and the better the technology from the prop firm, the better the result, or at least, you know, like you can hold and you will not be crushed by a wave. So I think this is it. So, but regulation, I think it's a common secret that everybody is waiting for it. They just want to see how and when.
And there's still no idea about which jurisdiction or which countries or regions might be the first, right?
No. Maybe European zone is a little bit stronger and more proactive, at least historically. We've seen it also from the brokers. But again, I don't think somebody has an actual idea of what will happen.
It's interesting to me, you know, when I saw or when I see news of, let's say, firms that are firmly established as prop trading firms or funded trader firms, acquiring retail brokerages, because I see a lot more of that than the opposite, right? The retail brokers getting into, let's say, the prop space. But I might be wrong. I kind of have this question in my head. Well, okay, if they are acquiring existing, let's say, successful retail brands, those brands are obviously regulated in different jurisdictions. Wouldn't that actually speed up the process as well? Because again, it's a prop trading firm that's getting into a regulated space. I don't know whether or not it makes a difference whether they're separate entities or part of a group of companies or something like this, right? I'm not a lawyer or legal professional, but I'm just thinking, okay, well, obviously the regulators that have to regulate the retail side of that business, and now that business has an arm that includes a successful and established funded trader or prop trading firm, wouldn't that speed things up, right? The regulator would be like, oh, let's take a look at what is being done there or isn't being done and see, okay, well, maybe these are logical steps to implementing some sort of regulation for prop trading where you can take some parts of the retail trading regulations and apply them in some way, shape, or form to prop. This could be marketing. This could be trade execution, risk management, many other things that regulators of retail shops are busy with these days.
Yeah, you are right. In a way, it will speed up things, and it's actually quite common trend now that at least the big pro firms are, if they have not done it yet, whether it is acquiring or creating a new broker and putting under an umbrella from the legal side of you, and etc., they are thinking about it. So also us in FunderPro, as I told you, from the first day, the founders said that it's all about transparency.
Yep.
If transparency will be enhanced by a regulated broker, we would be more than open. In fact, we believe that there should be a hybrid product offering. So there needs, even the clients are asking, some of them that are extra careful, they are asking are you backed up by a regulated broker? Because it gives them safety, they feel more safe. And it up to a level, it might be, up to a level, it doesn't really matter. Yeah. But we believe in FunderPro that a hybrid approach, for example, a prop firm and a regulated arm, is actually the future, right? And to your question, yes, it might speed up things, or if it will not speed them up, maybe it will give a window or a more clear path for the regulators to see what and how can they regulate the space, right?
Well, Petros, thanks for giving us all of your insights today. Again, it's always a pleasure to speak with you and get an update kind of on what's going on with FunderPro and the industry segment at large, so to say. So it's a pleasure seeing you once again in this nice, cool studio that we're in.
Yeah.
And I'm sure we'll see each other very soon at industry events. We wish you all the best, and I'm sure we'll speak again soon this year.
Thank you very much for having me. It was always a pleasure. Again, it's always a pleasure being here with you and having a discussion. And I hope we created some content for the audience that it's quite helpful. And definitely I'll see you soon in the events.
Yep. Thanks so much.
Thank you.
Thanks. Cheers.